We are covering these 8 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on BTE. Baytex Energy Corporation is a Canadian energy company with a solid footprint in the Western Canadian Sedimentary Basin and the Eagle Ford in the U.S., focusing on the acquisition, development, and production of crude oil and natural gas. Their operations are spread across a few key areas: Eagle Ford in the U.S. and several regions in Canada, including Pembina, Duvernay, Viking, and Peace River. Today, the company saw a 2.77% boost in its stock price, which is definitely a good sign for investors. This uptick could be reflecting the market's confidence in their ongoing operations, or perhaps a positive shift in oil prices, given the volatile nature of the energy sector. With Baytex's diverse portfolio across different regions, they're in a good position to weather fluctuations in energy demand or prices, especially with their presence in the liquids-rich Eagle Ford shale, which has been a strong performer for them in the past. It's also worth noting that energy stocks can often be a bit cyclical, so any positive movement here could signal investor optimism about Baytex's ability to manage production costs or capture higher oil prices. If the broader market or energy sector remains favorable, there could be more room for growth, and the recent increase in stock price could just be the start of a positive trend. Our review on NGD. New Gold Incorporated is a Canadian gold mining company that operates 2 key assets: the Rainy River Gold Mine in Ontario and the New Afton Copper Gold Mine in British Columbia. These 2 operations are at the core of the company's business, and with a focus on both gold and copper, New Gold continues to strengthen its position in the Canadian mining space. They're also involved in acquiring and developing additional resource properties, so there's always the potential for more growth in the future. The stock saw a nice jump today, rising 3.06%. What's behind this surge? New Gold recently announced that they've sent out their management information circular in preparation for their upcoming shareholder meeting on May 6, 2025, which will be held virtually. The virtual format makes it more accessible to shareholders, allowing more people to get involved with the company's decision-making process. Another key update is the departure of board member Margaret Mulligan, who's resigning after 7 years of service. While changes like this are common in the corporate world, Mulligan's resignation marks the end of an era for New Gold, as she played a significant role during her time with the company. Her departure leaves the door open for fresh leadership, and that can often bring new perspectives and strategies to the table. It's worth noting that New Gold has expressed its gratitude for her contributions, showing that her impact won't be forgotten. As a result, investors seem to be reacting positively to these updates. The company is pushing forward with its plans and positioning itself for the future, which makes this a good time to keep an eye on the stock. All in all, the slight uptick in stock price today might just be the start of something bigger as New Gold moves ahead with its next steps. Our review on ABEV. Ambev SA is a big player in the beverage space, hailing from Brazil, and is known for producing and distributing a variety of drinks, everything from beer to soft drinks and non-carbonated beverages. The company spans across the Americas with operations in places like Brazil, Argentina, Chile, Canada, and many more, bringing brands like Budweiser, Brahma, and Corona to the market. Today, Ambev stock is up 2.19%, and honestly, that's a solid boost. It's a reminder that despite any ups and downs in the broader market, the demand for well-established beverage brands often keeps flowing steadily. The company continues to dominate its markets, especially in Brazil, which is one of the world's largest beer-drinking nations. Plus, their portfolio of brands and global presence gives them some nice stability. Investors are likely reacting to the company's strong positioning in key markets and the fact that they're holding their ground despite any competition. If Ambev keeps pushing their marketing and innovation, especially in regions like Latin America and Canada, there's potential for continued growth. A lot of eyes are on how they manage their expansion and maintain strong sales in both the beer and soft drink segments, And if today's rise is any indication, things are looking pretty solid for them right now. Our review on MO. Altria Group Incorporated, known for its portfolio of tobacco products, including popular brands like Copenhagen and Skoal, is showing some solid movement today, with the stock up 3.22%. As a holding company with a diverse range of segments, smokable products, oral tobacco, and even e-vapor through its NJOY subsidiary, Altria has been making moves to stay relevant as consumer habits shift. Even with all the regulatory pressure surrounding the tobacco industry, Altria's ability to adapt to market trends, like the growing interest in nicotine pouches and e-vapor products, seems to be paying off. Today's uptick suggests investors are feeling optimistic about their continued efforts to diversify, particularly in the oral and e-vapor markets. The smokable segment, which includes iconic brands like Marlboro, continues to be a cash cow, while new ventures into alternative products might offer a buffer against long-term declines in traditional cigarette sales. For investors, today's rise is a good reminder that while the tobacco industry faces its share of challenges, Altria's ability to pivot and capitalize on new product categories can help keep the stock looking attractive in the short and long run. With strong brand recognition and a foothold in emerging nicotine products, there's room for continued growth, something investors are clearly taking note of today. Our review on GME. GameStop Corporation is seeing some positive movement today, with a 2.72% rise in its stock price. This comes after Wedbush analysts raised their price target on the stock to $13.50, up from $11.50, though they still maintain an underperform rating on it. So what's fueling this uptick? The main development here is GameStop's announcement of a $1.3 billion offering of convertible senior notes. This is a big deal for the company, as it plans to use the proceeds for a variety of corporate purposes, including an intriguing new move into the world of cryptocurrency. Specifically, GameStop is planning to purchase Bitcoin, which is in line with its updated investment policy. This is a notable shift for the company, which has historically been known for its brick-and-mortar retail business focused on video games and entertainment products. However, Wedbush isn't exactly sold on this strategy. They've expressed concerns about the rationale behind investing in a company that plans to convert cash into Bitcoin. According to Wedbush, it's hard to see why investors would pay a premium for the potential of GameStop to turn cash into Bitcoin when they can simply invest in Bitcoin or a Bitcoin ETF themselves. In other words, while the move into crypto is bold, Wedbush seems to think it may not be the game changer some are hoping for. Even with this skepticism from analysts, GameStop stock is still showing some strength today, suggesting that there's at least some investor optimism around the company's efforts to evolve. It's clear that GameStop is trying to pivot and transform its business beyond just video games, potentially tapping into the booming interest in crypto. This shift could pay off in the long run if it can successfully tap into that market, but for now, it's a bit of a gamble. The market's reaction today shows that some investors are buying into the idea that GameStop's future could look a lot different than its past. So, while Wedbush remains cautious, the stock's uptick today highlights that GameStop still has some momentum behind it as it continues to push into new territory. Whether or not the strategy will pay off in the long run remains to be seen, but for now, it's enough to keep the stock moving in a positive direction. Our review on EXC. Exelon Corporation, a leading energy transmission and distribution company, saw a solid 3.06% rise today, catching some attention in the market. The company, with well-known subsidiaries like ComEd and Pico, benefits from substantial institutional backing, with around 84% of its shares controlled by large investors. This high level of institutional ownership gives these players a lot of influence over Exelon stock, which can be both a positive and a risk. If these institutions decide to sell, it could trigger a significant shift in the stock price, especially during market uncertainty. Looking at Exelon's financials, the company reported a slight uptick in revenue to $5.47 billion and a net profit of $647 million for the most recent quarter, showing steady growth. However, despite these positive numbers, analysts remain cautious. JP Morgan maintained a hold rating with a price target of $47, reflecting some uncertainty about the company's future growth trajectory. Other analysts like Morgan Stanley also share a similar outlook, maintaining a hold rating with a $48 price target. One thing to watch is insider activity. There has been a noticeable uptick in insiders selling shares recently, which could be a sign of shifting sentiment within the company. However, overall, Exelon's strong institutional support and steady financial performance suggest that the company is in a relatively stable position. With analysts keeping a close eye on it, Exelon stock might continue to be a steady player in the energy sector, though investors will need to stay alert to any shifts in sentiment or market conditions. Our review on LYFT, LYFT Incorporated, the popular ride-sharing platform operating across the U.S. and parts of Canada, saw a solid 2.59% increase in its stock price today. While Lyft has been facing a pretty competitive landscape, especially with the ongoing battle against companies like Uber, it's been making moves to stay relevant and keep its growth going. The company continues to rely heavily on its core ride-sharing business, but it's also been expanding its service offerings. Lyft's bikes and scooters, as well as its Express Drive program, where drivers can rent vehicles for short-term use, have been key parts of its strategy to diversify and offer more transportation options. And with Lyft Business, they're aiming to capture a bigger chunk of corporate clients who need reliable transportation services for employees and clients. Despite the challenges in the ride-sharing industry, where rising costs and driver shortages have been issues, the uptick in Lyft stock today shows investor confidence in its ability to adapt and potentially thrive. As Lyft looks to innovate and keep its platform flexible, its stock's positive performance today could be a sign that investors believe it's headed in the right direction, at least in the short term. While Lyft's ride-sharing marketplace remains the bread and butter, it's the additional services and expansion into new transportation avenues that are getting attention. Of course, competition will remain fierce, but for now, this jump in the stock shows that there's still plenty of optimism surrounding Lyft's future growth and adaptability. Keep an eye on this one as it continues to evolve in a rapidly changing market. Our review on NWSA, News Corporation, the media giant known for its diverse portfolio that spans from publishing to digital real estate services, saw a solid 2.37% rise in its stock price today. This uptick comes on the back of a significant move involving the closing of a transaction with Fiscal Note. The deal, worth $40 million, involved News Corp's Dow Jones division acquiring two global intelligence businesses, Oxford Analytica and Dragonfly. Now, this acquisition strengthens Dow Jones' already robust position as a global news and business information provider. For News Corp, it's a strategic move that deepens its presence in the global intelligence space, which is a critical area given the growing demand for real-time data and analysis in business and government sectors. But what's even more interesting here is the financial impact. After the deal, Fiscal Note will use the proceeds to pay down a significant portion of its senior term debt, cutting it by about 30%, which is a smart financial maneuver. Reducing debt not only strengthens their balance sheet, but also provides some leeway for future growth or additional acquisitions. The market seems to like this move, reflected in the stock's rise. Investors are clearly responding to the idea that News Corp is continuing to make strategic acquisitions that both bolster its business divisions and contribute to its long-term financial health. If the deal integrates well into Dow Jones operations, we could see this trend of rising stock value continue, making News Corp an interesting stock to watch in the coming months. Please subscribe, give the video a like, and watch more from our playlist. Thanks.